Hi, everyone. Thanks for letting me just jump in on your conversations there. And hopefully you can see my presentation. And again, welcome to the Maple Business Council. It's our summer reception. Normally we would be doing this across LA, Orange County, and San Diego. But this is going to have to do for a little while longer. So I just want to give you a quick update on Maple. I'll also be handing it over to Stephen to take on part of this as well. And again, just appreciate you taking the time out of your day and hanging in there on these virtual events that we all know we're getting tired of here. But anyway, thanks for your time. So again, we just had some virtual table networking. We know that the platform is new to many folks, that often these are the first sessions that you're doing on Remo, but we think that this is a little step closer to being in person. So we'll give you a quick update here, as I mentioned, and then we're going to be talking about Canadian US dollar currency strategy with AFEX, and then testing emerging technologies from QA Consultants. And then we're also going to talk about diversity through technology transformation with QA Consultants as well. And then we'll come back to our virtual table networking. So one of the things you might want to do is, just take a look at the participants list that should be on the right side of your screen. And if there's somebody that you didn't have a chance to chat with, identify them and catch them afterwards, because we'll go back to the virtual tables for some more networking at the end. So we'll carry on here. So from a housekeeping perspective, lines are muted during this phase, but we will come back as mentioned. And we are recording this session, so the presentations and a copy of the materials are going to be available via follow-up communications from Maple. On the right side of your screen, if you don't see it, there might be an arrow in the upper right corner that you can click to open up a QA panel. Certainly jump in there and ask questions of the speakers along the way. Or as I mentioned earlier, you can chat with fellow participants there as well. So, just want to say we're continuing to grow. We're actually quite amazed at, even during this downturn, just how active the community has been. And we're 6 years in. We launched in 2015. We've had over 100 events. We've done delegations to Canada, obviously tons of articles and videos, over 120 members from 50 organizations now, and over 20 markets, or sectors, I should say, and 20 markets across Canada and the US. And we've also entered into a number of economic development partnerships, as well as innovation community partnerships. And we think those are important as well, as we try to, support economic development on both sides of the border. And, we've said from day one that we want to support companies at all stages of growth, including, startups. So being engaged in that innovation community and helping them, find their path on either side of the border is important. We're in Southern California, and what we found also was interesting is we never thought we'd launch a new chapter during this pandemic in a virtual model, but it's actually worked out quite well for us with the launch of our New York and BC chapters. So it's been a good 6 years, including this unfortunate situation we find ourselves in. And we want to constantly kind of think about our members that are joining us on an ongoing basis. And I actually have to pull up. I'm sorry about this. I just really screwed up and didn't print out notes, and they're not visible to me. Bear with me. I'm going to see what I can do. How about I just talk about you guys? Sorry about that, guys. I really apologize. It's getting the screens right. When I'm on Zoom, I'm able to see my notes on all of this stuff. And so apologize, I didn't print these out in advance to get all of our details. So we're pleased to welcome Bill Jones, VP of Smart Technologies and Innovation at Intervistas Consulting, specializing in aviation, transportation, and tourism sectors globally. Also, a warm welcome goes out to Darren Kovacs, founder and managing partner of the SEO company Jelly Digital Marketing and PR. Get to my next page. Sorry, it's not moving as I wanted it to. I guess I have to actually click on the slide. Okay, joining us as well since our last meeting are Chris Annunziata, Global Account Executive for National Corporate Housing, a global multi-brand turnkey furnished housing company that provides temporary accommodations across the world. Chris is based in Greater New York. We're also pleased to welcome Fiona Brown, partner at leading law firm Airden and Berlis LLP, based in Toronto. Fiona's practice is focused on helping U.S. and international firms successfully enter and grow in the Canadian market. And then we also are pleased to have join us most recently Sherry Rudolph, who's a Chief Marketing Officer and Chief Development Officer at Good 360, a leading product philanthropy organization in the U.S. Since founding 37 years ago, Good 360 has moved over $10 billion in donated goods and vetted charities who put these goods to work for their communities. And Sherry is a native of Calgary. Patrick Perreault is the CEO and founder of Perimeter Software in Montreal and is one of the innovators of Getting to Global, an online platform including a fast-growing export accelerator initiative that connects exporters with information and networks to help them be successful. We're also proud to welcome St. George, Quebec, headquartered Turbo Images, who's a leading vehicle wrap company that serves the needs of commercial trucking and public transit. They've been, they have a long-standing and growing presence across the U.S., including Southern California, and are growing that currently. We also want to invite or welcome Investissement Québec International as a Gold Leaf member organization. Invest Quebec strives to bring more foreign direct investment and talent to every region of Quebec and offers specialized assistance to Quebec businesses looking at diversifying their markets and increasing their exports. Bienvenue. And also recently, together with Maple New York Executive Director John Costanzo, we're pleased to welcome Livingston International as a Gold Leaf member. Livingston is Canada's largest customs broker and third largest entry filer in the United States. Livingston works with businesses of all sizes to streamline customs processes, identify critical cost savings, and reduce the risk of transport delays and non-compliance with regulatory requirements. We also want to thank our renewing members, Brookfield, Kenobi Martins, and Unstoppable Conversations. So, Kenobi Martins has been a Gold Leaf member with us for years, actually since the beginning of the organization. They've been with us. And we've had renewals from Brookfield's California Market Center, who recently profiled their CMC development at our Spring Maple, BC reception. Fabulous development happening in downtown Los Angeles. And then a management consulting firm, Unstoppable Conversations, who also recently hosted an excellent webinar on leadership for our members. And we also want to thank renewing executive members Cynthia Coulter, CEO of Alexander Corporation, Bill Edwards, CEO of Edwards Global Services right here in Orange County, also I think one of our first members, if not the first member, of Maple, Fabio Furlan, who leads CSA Group's presence in SoCal, and Toronto-based wealth advisor Bernadine Pereira. So thank you all to the renewing members. And with that, I'll hand it over to you, Stephen. And you probably don't have the same challenge that I have with not being able to see notes and so forth. So I'll go back to normal presentation mode, and you can run with it from here.
Absolutely. Thank you, Rob. And thank you, everyone, for coming today. We're really excited to come together and share our community and some great content for you today. I think just reflecting on what Rob shared with us, we're so excited by the diversity of expertise and the wide variety of geographic markets represented in our community, which continues to grow. There really isn't any other council or community connecting Canada and the US quite like what we're doing together. And it's really a testament to all of you participating and supporting our initiatives. Next slide, please. I want to talk a little bit about the partnerships that we've signed since our last meeting. And we don't sign a lot of partnerships because we don't want to just sign paper for paper's sake. We really want to create and forge alliances and relationships that deliver meaningful value. We're particularly excited about signing an MOU with Kitchener-Waterloo, Ontario-based Communitech Outposts. Many of you may be very familiar with Communitech and their leading work in terms of supporting startups in Canada. And their Outposts group particularly focuses on helping hire talent internationally. And they provide an employer of record service that helps with the onboarding of that talent, the payroll and benefits administration, and international HR compliance. So they, get rid of some of that friction that can slow down growth for a company when they need to put somebody in a market outside of Canada. And so we're going to be working with Communitech Outposts to be their community kind of wraparound for these executives who are working for a Canadian startup in a market like LA or New York. And to help them connect with the rest of our community so that they can be better in touch with Canada-US opportunities. So we're excited about this relationship. As you know, Kitchener-Waterloo is one of the leading innovation centers in Canada. And there's a lot of great opportunities to connect the dots to our US markets. Next slide, please. And kind of bookending our innovation community outreach from a partnership perspective, we're also excited to announce that we are a MOU partner with the Alliance for Southern California Innovation. And this is a really interesting group. They began in 2017, and they're really looking at the startup landscape in Southern California and really helping to profile all the different innovation nodes, as they describe it, throughout the region to better connect people within the innovation ecosystem here in SoCal, but also the dividend is for people outside of California and outside of the country to understand where they might fit in and plug into the innovation landscape here. And they're connecting startups, research universities, VCs, business mentors to really create a sense of community and a greater sense of awareness of what Southern California offers. Coming from Canada, a lot of us think about innovation in California as, the domain of the Bay Area, and there's certainly a lot of exciting work there. But equally, there's a diverse and robust community here in Southern California that we want to champion. And so our alliance is going to help our Canadian members get to know this community better. And so we're excited to do some work together. And one of our advisory board members, Eric Eide, formerly of Mayor Garcetti's International Trade Office a few years ago, is actually the director of ecosystem development for the Alliance. And so we have a particularly close connection with Eric and his team. Next slide, please. So now on to some storytelling. Now these events I always look at as kind of exclamation marks for our community because we share our stories throughout the year, and then we have the opportunity to come together virtually or in person to shake a hand or share a video together and talk. But throughout the year, the continuity of our conversation is really driven by our stories and the platforms that we use to help you share your expertise. Next slide, please. And the Momentum monthly newsletter reached a milestone since our last event. We've now published more than 50 issues of Momentum, and each issue typically has 2 thought leadership content pieces from our members and our strategic partners talking about their work, their perspectives on Canada-US opportunities to inform and educate us. And we've had the pleasure of interviewing John Keisler, Economic Development Director for the City of Long Beach, one of our strategic partners, a couple issues back. Audit, tax, and consulting firm member RSM shared a wonderful profile of the Canadian federal budget and perspectives on that. The co-leaders of the US practice of Fasken law in Canada, Gesta Abels and Neil Kravitz out of Toronto and Montreal, respectively, really penned an interesting article about going north to Canada for private M&A deals and some of the opportunities and considerations that you should have as a US company looking at investing in Canada. Eric at the Alliance, profiled the innovation landscape for us recently. And Glenn Yanamitsu, the Managing Director of Advisory Services for the Business Development Bank of Canada in Ontario, wrote a really thoughtful piece about resiliency and leadership and what kind of leadership is required in these kind of white waters that we're all navigating through the pandemic. And Glenn will actually be our speaker at our September event, and he's a very thoughtful speaker and writer. And so if you haven't caught any of these articles, they're on our website on the Momentum page. Next slide, please. Now, because of the pandemic, we haven't had the opportunity to go into our studio, so to speak, to capture more conversations with our members. And we've done over 40 episodes of Maple Conversations, which are about 2-minute videos capturing a little bit about what you do. So we stepped back and we thought, at this time of building back better and the need for Canada and the United States to collaborate closely together for a just and a robust economic recovery, let's insert the Maple voice into this cross-border narrative, especially as our administrations are working as closely as ever in history. And so we pulled some excerpts from across all of our episodes into a special compilation video to reflect on the knowledge, expertise, and the capabilities that you all have in helping businesses grow across the border, which is so critically important at this time in our economies. And we were very grateful to have the contributions of Canada's Consul General in Los Angeles, Zaid Sheikh, and Acting Consul General Hawar Nassim at the Consulate General in New York to record special messages about building back better and the closeness Canada and US share in terms of not only economic recovery, but the opportunity to, as partners, friends, and allies, continue to work closely together. This is like a mini short film for us. It's about 15 minutes long, and you can catch it on our website as well. Next slide, please. Another special communication piece we're working on right now is a special issue of Momentum this month on diversity, equity, and inclusion. And as Rob mentioned, this is our 6th anniversary, and the wraparound this year is DEI. We recognize that with the growth that we've had in our membership and the knowledge and expertise in our community, that we need to be doing our part to be advancing and contributing to DEI knowledge and doing the right things. And we're in a really unique position as a membership organization because we have a window on all your organizations, and we also have platforms to be able to share your ideas, your inspirations, your aha moments, your insights to our overall network, which now is over 3,000 people that follow us on our newsletters across Canada and the United States. So in this issue, we've asked our members to contribute content about some of your DEI work, and that we can then collectively present this to our overall network for hopefully opportunities to learn and inspire people. So watch for this coming in the next couple of weeks. Next slide, please. So what's upcoming? Well, I want to give a shout out to something that just happened actually this week. And on the next slide, we have a strategic partnership with World Trade Center Los Angeles, Stephen Chung and Michael Smith and team. And they do a wonderful report each year on foreign direct investment in California. And in the last 2 years, it's expanded from Southern California, LA focus to include the whole state. And yesterday, they hosted a terrific webinar that had the Lieutenant Governor of California speaking as well about our economic recovery and the importance of FDI to California's sustained growth. This year, Canada ranks as the 6th largest investing nation in California. And if you look at the data specifically to Southern California, we rank number 4. And in the areas outside of the Bay Area and outside of Southern California, a region they call Greater California, we also rank 4th. And what we're talking about is about 1,500 Canadian-owned firms that are operating in California, directly employing over 50,000 people. And the estimated wage impact of those jobs is $5.25 billion. So Canada truly is invested in the success of California. And while our number dropped a little bit overall for the state this year, we certainly were living through strange times together, and we will hope to see our overall number return to where it's been at number 4 for the state next year. But nonetheless, Canada, excuse me, is really an important economic contributor to our state's economy. And we can see that on the next slide as well, which breaks down kind of from a sector perspective. You see there are significant Canadian jobs in manufacturing, professional business services, information, wholesale trade, and financial activities. And the data here is presented also by county and region of California. We'll be sharing the full report with all of our members in the coming week, and it's well worth the time to take a look at this. This is just another example of how closely entwined Canada and California are together. And it just, I think, lifts all boats for all of us looking at opportunities for our own businesses coming into the state. Next slide, please. We have a couple of events coming up that also kind of bookend the summer months as well. So Jason C., our Executive Director for Maple, British Columbia, will be hosting a member mixer for the BC chapter on June 28th. And we're honored to have Consul General of Canada, Brandon Lee from the Seattle Consulate Office as our special guest. And I think this is a wonderful opportunity for our BC members to hear about what the Canadian government is doing in the overall Cascadia region, recognizing how important the economic ties are between Washington State, Oregon, and British Columbia. So that's going to be a special opportunity for an intimate discussion with Consul General Lee. And then our next main event will be our Southern California Fall Reception on September 9th. And we're looking forward to contributions from the Business Development Bank of Canada. Glenn Yanamitsu will be speaking, as well as Ontario Trade and Invest from their Bay Area office. And we'll be looking at how the things are opening up over the summer months to determine how best we make these events available to you starting in the fall between in-person and online options, and expect we'll be moving to a hybrid platform of some kind. Next slide, please. So if you're attending this event today and you haven't become a member of Maple, we'd highly encourage you to reach out to us. We'd be happy to talk to you about the different platforms that we offer. It's very much about networking and content storytelling, and very much about community. And so there are a lot of benefits you get by becoming a member and being able to share your expertise with others, and would welcome those conversations with you. So we're going to now move over to our presenters today. If I could have the next slide, please. It's my pleasure to introduce Richard Flaglor. Now, Richard is the Regional Sales Director for West North America for AFEX, the global payment solutions provider. And Richard has an extensive background, over 15 years in sales and operations across 3 continents. And I think his personal bio in terms of where he's lived and some of the things that he's done, I think you'll find very interesting. He's lived and worked in some great places in Canada and abroad. Currently, Richard is responsible for providing strategic direction across Western North America for his team of regional account directors, and is based in one of the most beautiful parts of Canada, Victoria, BC, on Vancouver Island. So Richard, thank you for coming today, and the floor is yours.
Awesome. Well, thanks, Stephen, for that. First, I'd like to thank Stephen, Robert, and the entire Maple team for giving me the opportunity to speak here today. I know it's been a tumultuous and turbulent last 12 to 18 months for everyone, and clearly the industry I'm a part of has seen this firsthand. So I've got quite a bit of to cover this morning, so I'm just going to go right into it. So here we go. Okay. So today I'll be sharing AFEX's view on hedging, strategy, and how to navigate a volatile environment there. So as Stephen shared, 15-year leader in sales and operations across 3 continents, and as he mentioned, providing strategic direction for Western North America for AFEX's regional account directors. So what we're going to talk about here today is, who and what is AFEX, what is hedging, why hedge, how to hedge and budget setting, and we'll go into who should you use to hedge. And the last piece, we'll look at the USD CAD technical view. So who and what is AFEX? We're a global organization where our head office is located where a lot of you are, in Los Angeles, California. We have global hubs in London, Sydney, Toronto, but we have multiple locations across North America, UK, Europe, and APAC. We serve clients in as many as a dozen languages, cover all time zones, and as you probably know well, the FX market is a market that doesn't sleep. It's pretty much what we call a 24/7 market. An interesting factoid about AFEX is that it was actually purchased from a Chilean businessman by Irving Barr and Fred Koenig in 1999. So its inception was actually in Chile all the way back in 1979. So fast forward a few years to 2003, 2005. The expansion of the business quickly took off. Moving forward through 2010 to 2015, there were multiple offices opened across Europe, the UK, North America, and specifically in 2014, 2015, we saw significant growth as AFEX purchased two separate firms in Canada to pierce the Canadian market. Before that, there really wasn't a lot of activity done in the Canadian market by AFEX at all. Fast forward all the way to the fall of 2020, and a significant milestone was hit that I'll touch on here in a minute, as an agreement was made in principle by Flaglor Technologies out of Atlanta to purchase AFEX. That deal was officially closed on June 1st, so a couple of days ago. So as I mentioned, for the past 40 years, AFEX has been a global leader in international payments and foreign risk mitigation. But as of June 1st, the aforementioned agreement to purchase was finalized, and we have officially now been purchased by Flaglor. So who is Flaglor? Flaglor is a leading global payments corporation, terrific track record of growth, recognition for leadership. Flaglor has been named by Forbes as one of America's most innovative companies for the last 4 years running. One of the US's largest privately owned companies, and now poised to become the largest non-bank provider of global payments worldwide. Working alongside Flaglor will allow us to strengthen our global payment offerings and provide our clients with an array of new services. So some of our most exciting upcoming capabilities with the connection with Flaglor will include new low value payment rails to avoid any wire fees, adding multiple new currencies to our incoming abilities as well as outgoing, as well as being able to offer prepaid debit cards all around the world. So also under the Flaglor corporate payments banner is Cambridge Global Payments, Invoice Pay, Comdata, Rogers, so all part of their global payments organization. So those four organizations, including ourselves, will be coming together slowly but surely over the coming months, and we'll actually be rebranding to an organization by the name of Corpay, and that should happen by the end of 2021. So as far as AFEX in numbers, we send payments to 180 countries, send and receive more than 100 currencies, about 1 million FX transactions in the last recorded number of 2018, well over 35,000 clients. As I mentioned, offices pretty much globally, 22 offices, 11 countries. And we also have a number of strategic partnerships in EMEA, APAC, and the Americas. Notable partners in transportation, film, entertainment, finance, travel, yachting, fintech, really you name it, we have partnerships. So if you're interested in knowing a little bit about who we partner with or interested in becoming one, please let me know and we'd be happy to chat. It is a very integral part of our business, very similar to as Stephen mentioned in terms of partnerships that they take on as well. So what's the point of AFEX and why should you choose it over a bank? Well, for global payments and strategic risk management solutions, we obviously offer many advantages. Everyone talks about cheaper price. So we do offer competitive rates and reduced fees. efficient hedging tools, favorable credit terms, process improvement. So, generally we help people make the whole process of global payments, significantly seamless compared to how they might be doing it presently. And we believe that we're a trusted resource. We have a dedicated point of contact for advice, proactive strategic support. We also offer market insight, daily, weekly, and monthly market insight to our clients and the partners that we work with. So one of the things that we'll touch on significantly here is hedging and our view on it, and specifically why we feel it's important. So one of the most important aspects in choosing to hedge is risk mitigation. So one of the things that's really important for us to emphasize is we aren't looking to make money on foreign exchange for you. This isn't an investment or anything of the sort. We're looking to mitigate the impact of exchange rate movement on the cost of the business. So it's our responsibility to make sure that you don't lose money and your margins aren't squeezed by foreign exchange movement. So how do we do that? So risk management for corporates. So currency risk management is obviously an integral part of the unified corporate risk strategy. So what we're looking to do here is contain costs, maintain or increase stakeholder value, protect your profit margins, add a degree of certainty, and to open up new opportunities as well. So again, implementation of a hedging policy can provide more certainty against challenges such as protecting gross margins, maintaining a competitive edge over others in your industry, distraction away from the core activity of my business. The last thing you want to do is spend multitudes of your hours watching the market and trying to time it or something of the sort. So a clear hedging policy provides peace of mind and protects against adverse FX shifts. So ability to safeguard against planned and unforeseen risk events, very similar to what we saw last year, which obviously I don't think anyone had COVID on their bingo card in 2020. So we view this as 5 steps towards an effective hedging strategy. So we're going to go into reviewing past performances to identify challenges, what's worked and what hasn't, calculate anticipated needs for the future, greater or smaller new markets, set budget rates, choose appropriate tools, lock in rates as needed, periodically evaluate performance and adjust as needed. So you definitely want to evaluate your FX strategy at the end of every fiscal year. So the first thing we want to do is identifying your FX exposure. So we'll run through 4 specific ones. Transaction exposure. So this is the most common and relevant type of FX exposure for most companies, occurring when your company enters into a financial obligation denominated in a foreign currency rather than a domestic one. Pretty straightforward. Unfortunately, unexpected changes in the underlying currency rate can have a negative impact on contract value in the future. Again, something we saw firsthand last year. So the next would be translation exposure. So when your business has assets and liabilities denominated in a foreign currency, changes in the underlying currency rates can affect your balance sheet. So 2 examples are foreign loans or participations in foreign entities or subsidiaries. This type of exposure is also known as accounting exposure, since it concerns translation of accounts into the home currency. So the next we'll touch on is economic exposure. So economic exposure deals with the impact of the currency rate changes that affect your future earning potential, and obviously your company's valuation. So if 30% of your revenue is generated abroad, a shift in exchange rate, by 30% may lower your earnings clearly in domestic currency. So that's going to directly affect the valuation of your company in the future. And the last piece is operational risk. So it deals with inefficiencies in internal processes, legacy systems, and processes may not keep up with your business growth. So reconciling errors and discrepancies, clearly takes time. The next thing you want to do is calculate your FX exposure. So if you want to know how to hedge, well, then you need to know how much you need to hedge. So to determine what amount to hedge, it's vital to calculate future cash flows in foreign denominated currencies. So if your company sends and receives money in the same foreign currencies, you can potentially apply netting, aggregating obligations and receivables to offset positions, where these money flows, where the money flows in order to lower your hedging risks needs for these currencies. So I'm not going to get too far off track, but some advantages to look for with suppliers is to be sure you always request dual invoicing. This will allow you to reuse any currencies that you may be paid in to naturally hedge out any exposures. So another side advantage is many suppliers will offer discounts on home currencies. Having the flexibility to pay an invoice in a vendor's local currency can save you on a transaction, conversion costs, and give you additional visibility to controlling your cash flow. So being able to plan ahead with a forward contract or other hedging approach may temper volatility and add certainty to your costs. So the next thing you want to do is really understand the product. So we can, look at evaluating and we can look at calculating your risk, but we need to understand effectively what's a good product for your business. So any successful hedging strategy starts with an assessment of which kind of exposure is applicable to your business. So we offer a full range of FX hedging tools, including window forward contracts, currency options, which are structured products, which can offer protection as well as upside with favorable market movements. These valuable tools will allow you to hedge your currency rates with flexible delivery options. Another kind of piece that doesn't really get spoken about very much in hedging is a simple market order, so a rate order. So choose a target or buy, choose a target to buy or sell for a future order. So we'll advise on a target rate, notify you when that rate is achieved. Market orders generally sit in the market for any length of time and go across all time zones as well. So being a global organizations, we have the advantage of pulling rates that might be in the overnight orders that will allow us to kind of touch into the markets in APAC or Europe. The other obvious hedging product is a forward contract, which can be locked in for up to 24 months. That contract will protect you from unfavorable movements in that relevant currency while avoiding the need to use all your cash flow to buy currency in advance. So a forward contract is just a commitment to purchase or sell the currency at the agreed rate, no matter where the market is at the value date. So different types of forward contracts, and outright forward is generally exchange one currency for the other at a fixed value date, so a specific date in the future, again, up to 24 months. With this contract, you'll be assured a fixed currency rate on the day that the currencies are actually exchanged in your account. So in most cases, there's no deposit that's required to enter a contract of that sort. You choose this type of contract if your company has future obligations with a fixed amount and a fixed due date. Most of our clients use window forward contracts. There was a time where there was a significant expanse between the interest rate in Canada and the interest rate in the US. And there was some pricing advantages in actually having a fixed date forward contract. That doesn't really exist anymore. So we generally advise our clients the flexibility to enter into a window forward contract, which allows you to use your purchase currency against a predetermined rate during a chosen period. And unlike that outright forward contract that I just spoke of, it allows you to use those funds at any time. So you can choose this type of forward contract if your company's future obligations don't have a fixed amount at a fixed due date, or if you just have a series of payments that are going to happen over a period of time. Window forwards are available for widely traded currencies, but one caveat I will mention is that they aren't available for a lot of exotic currencies. The last piece that I want to speak of in terms of hedging product would be a currency option. So a more structured or derivative product that gives you the right to buy or sell the currency at a fixed rate in the future. It allows you to protect on the downside should the market move against you, but offer upside should the market move in your favor. With some structures, you pay a premium, vanilla options, for instance, or simple collars. With others, there's no premium, but upside is limited. But generally, when there's not a premium, there's leverage. And those with leverage begets a risk. So there's many different structures and positions that are tailored to each risk appetite, but not every provider offers options, and many require a collateral deposit. One disclaimer I want to mention is you want to work closely with your relationship manager, your account director, to really help you understand and develop and implement a hedging strategy that takes your financial goals and currency exposures and risk appetite into account. So with any financial product, options are not suitable for every company and every circumstance. It's important that you fully understand the associated risk before entering into an options contract. So in terms of hedging, one of the most important things that you're going to do is actually set some levels in your budget. So many business owners and financial executives periodically take stock of their financial plans, reviewing performance against projections and benchmark before diving into planning for the future. So what most business owners will do is undertake these reviews at least annually. Some do them every quarter, while some review them semi-annually. When business goals or the operating environment changes, it's really wise to take a step back and review again. So a disciplined financial planning process is both a health check for your business and the foundation of your overall business strategy. So whatever your objectives are, increasing market share, launching new products, exploring new supply chains, or reaching a specific revenue or profit target, the process requires accurate budgeting, careful planning, and thoughtful execution, as currency volatility can have a significant impact on your ability to meet these goals. Evaluating your currency exposures and developing a proper balanced risk management strategy are really key components of your financial planning. So in terms of looking, with your currency pricing level set, you can manage your exposures by hedging your foreign currencies risk at those pricing levels, providing you not only more accurate budget figures, but also with protection from volatility. So your hedging strategy, which should be tailored, I stress that, tailored to your business goals and your risk appetite, would take into account the currency pairs, volumes, and flexibility you require. Portfolio solutions utilizing different tools, varying durations, amounts to hedge is really an approach that can be adapted to changes in the market conditions. So again, benchmarking an exchange rate between your home currency and your trading currencies will aid in your planning. Obviously, as I'm sure you would expect, there's no hard and fast method for setting a budget rate though. Some companies use the current spot or forward rate or a blend of the two. Others may use an average of currency pricing over a given period, for example, the past 3 days or the past 100 days. Some companies reset budget rates quarterly. I know some that set them every month, and others less frequently. What you do depends on the lessons you've learned from past experience and from your projections of the year ahead. So using forward contracts, you can lock in your budget rate in order to hedge against the unpredictability of the currency market. So predicting, and I will stress this, predicting the direction of the exchange rate is an activity we strongly discourage. It's likely you'll be proven wrong. I can tell you I have been, which could have far-reaching effects for your company's cash flow. So we highly encourage you to focus on your company's main activity while protecting yourself with a common sense FX strategy. You will never win and game the market. It just won't happen. So what the last thing we want to do is evaluate. So revision, reflecting, how do my prior budget rate hold up in the market? Obviously, business cash flows can change, which can have a dramatic effect on your business, your company's currency risk exposure. It's vital to evaluate your hedging strategy at least once or any time in your business or the business environment. We encourage you to reevaluate that strategy every year because changes do happen, as we obviously have seen over the last 12 to 18 months. I want to go into a case example of a business that we have here in Canada. It's a business out of Ontario, a company called Bar Hydraulics. So Bar Hydraulics is a privately held company that designs and manufactures and installs hydraulic piping systems. So they're based in Ontario, Canada, as I said, been in business for about 30 years, employ close to 100 people. So we asked them, what are your currency risks? So for them, their biggest currency risk is fluctuations in the market, specifically in the US dollar, falling, given they have a lot invested in the US. So there's many factors, as I've touched on: political developments, oil and gas prices, speculation on where markets are headed, consumer confidence, interest rates. Right now, inflation is a big keyword as well, and all these things can impact the currency and bottom line. So we asked them, why do you need to manage your currency risks? So around 90% of their customers are in the US right now. This is actually not uncommon, as many of you know well, for Canadian customers, where the vast majority of their business is in the US. So what they do is they actually utilize some of the currency differential as part of the profits on their exports. So if the US dollar falls to par, as it did obviously a decade ago, that can wipe out any profits that are generated from that whatsoever. And if they haven't factored that in, they actually have to increase the sales price on their products to maintain the margin, which actually can make them far less competitive in the given market that they're in. So just to kind of cap up effectively the hedging conversation, we want to kind of talk about who you should use to hedge. So you want to find someone who's trustworthy. So look for online reviews, talk to people in the industry that may have used such and such firm prior. You want to look for a proven track record. So ask for examples of where they've been successful and why. What have they done to help their customers protect their margins? A good hedging professional will tell you that every company provides different opportunities and challenge in building out a successful hedging program, but they should equally be able to show you how they've made a difference for their clients. So remember, you aren't looking for someone who says that they can prove or best the market, rather someone who is there to protect your business's margins against your budgeted rate, as we mentioned before. Strong balance sheet. So does the company have cash to sustain market swings? Unfortunately, in 2020, we saw an unfortunate circumstance where one well-known BC firm went into bankruptcy as they weren't able to hold a strong balance sheet with their banking partners, and subsequently had to default on numerous FX positions. So you want to be sure the company you are working with is solvent, secure, and sensible with their business strategy. Good credit facilities. So a good hedging strategy does nothing if you don't have a strong credit facility with the company you're working with. So you want to be sure you select a firm that that can offer you the unsecured credit that you're looking for to build out a successful hedging program. You don't want to be handcuffed with small credit facilities that limit your ability to take advantage of strong market position against your budgeted rate. And lastly, FX professional. So probably the most important thing in my humble opinion, obviously I'm partial, but probably the most important thing is to find someone who wants to understand your business and truly understand it. So not just the volume that you're processing, but truly understand what works for you and what doesn't. So one of the critical things to understand, it's not a one size fits all. It can be successful for almost every client, but only with a well-diversified strategy that allows you to participate both in the spot market and the hedging market. You want to protect yourself against negative market swings, but you also want to be able to participate in positive swings. So with that said, let's spend a few minutes talking about the currency cross that most of us are exposed to, which is the US dollar CAD. And what a wild year it's been. So I do want to thank our chief economist at AFEX, Trevor Charsley, for inputting a lot of the information that I'm going to share with you here today. Trevor releases a market report every month, and it's posted on our LinkedIn. So, definitely happy for you to kind of go and have a peek at that. I generally share it on my own particular LinkedIn as well. And he's been, voted one of the top, callers, if you will, for USD CAD by Bloomberg for I think the last 5 years running. I think he's been in the top 3. So he's talking about, and he has a really good head on his shoulders and really understands this particular market cross. So first, let's talk about the Canadian dollar because, well, I'm Canadian. So looking back to May, so in our market report in May, we suggested that the USD CAD had the chance to target 120. And we saw it trade to within 12 pips of that level in May, and about 12 pips of that level actually yesterday as well. USD CAD led all the other US dollar pairs lower, propelled by a myriad of other factors. The Canadian housing market obviously continued to outperform, building permits growing 5.7%. The cyber attack, which shut the US colonial pipeline, supported the oil price and hence the Canadian dollar as well. There goes our petrodollar. CPI also gained by 0.5% and over double of the 0.2% that was expected. However, as is always, it wasn't all one way for the Canadian dollar. April existing home sales fell 12.5%, a significant number that reflected a pretty significant decline, and far worse than the 2.5% that was expected. Now, the Bank of Canada Governor Macklem also said that the bank remained concerned about the household debt. Any of us who live and work in Canada hear about this a lot. Canada has one of the highest household debt to income ratios in the G8 or in the OECD. However, with the oil price staying supported, U.S. equity prices making all new highs, the economy picking up, the fundamental picture does truly look very positive for Canada. So what do we want to look forward to for June? So June events, opportunities, and risks. Central bankers are very aware that a weak currency helps exports, and that's no mystery. Now, considering that USD CAD was above 1.46 in March of 2020 and is now trading around 120, it's clearly no surprise that the BOC Governor Macklem has started to mention the CAD strength, specifically in mid-May. He did say recently that the strength partly reflected higher commodity prices, which of course are good for the Canadian economy. He did add, however, that the BOC had assumed an exchange rate of 125 in their forecast, and that the USD moved a lot further lower than it would have started to. So if the USD CAD moved a lot further down, that would certainly start to impact the bank's outlook. So in this case, they'd have to have a look at stronger exchange rate into account when they set their monetary policy. The reason being, of course, that a strong currency would increase Canada's export pricing and typically be a drag on exports. Technically speaking, if and when the USD CAD breaks 120, we could see a target 116, 118. I mean, there is obviously a chance of it going lower than that, but that's technically where we expect it to go. Obviously, all of this is, could be significantly changed if Governor Macklem decides to change the monetary conditions because he considers the currency to be too strong. But to do that, he would actually need to walk back his talk about a rate increase in 2021 or 2022, which he seems pretty firm on at this point. And some of the other OECD countries are looking towards that as well. I believe New Zealand, about sometime last week, had a conversation about rate increases next year as well. So looking towards the US dollar, so in terms of May, had a couple of surprises for the market. The non-farm payrolls put in a low surprise. The market had expected around 1 million jobs to be added in what was described as the biggest NFP miss ever. The unemployment rate actually increased from 5.8 to 6.1. Unsurprisingly, the dollar was sold quite hard on that news. The second shock followed quickly on the heels of the first. US CPI was released 3 working days after the NFP report. The market had expected a monthly gain of 0.3, which actually turned out to be a 0.9. On an annual basis, prices were 4.2% higher, with this being the biggest rise in inflation since 2008. So yields jumped from 1.6 to 1.7, and then the dollar strengthened. However, 2 days later, Fed Chair Clarida said it was no time to talk about tapering yet. So U.S. yields came straight back down, and in fact, core personal consumption expenditure being released above expectations as well, which started May at 1.6 and ended at a lower of 1.5. So Euro USD also gained 1% in May. So looking towards June events, opportunities and risks again, there is a well-known phrase in the market, and it's "don't fight the Fed." The simple truth is that the U.S. central bank has more firepower than any other market participant, and as such, to go against them is clearly madness. At the start of the year, the market concluded that inflation would be rising. The usual response to this by any central bank would be to start raising interest rates, which is a common practice. However, even though one of the Fed's mandates is to achieve price stability, we know that the other mandate of maximum sustainable employment is being put first. So all of this to say, in this case, the FOMC members have all been stressing that the latest round of inflation is transitory. So nothing to see here, move on, everything will get fixed in a few months. With the belief that it is madness, as I've mentioned before, to fight the Fed, the U.S. central bank has been able to move the U.S. bond yields lower over the past couple of months. Fed's Clarida did say at the end of May that they will be able to begin discussing the appropriate timing of scaling back their bond buying program, which I haven't had a look at the news today, but my understanding is they've started some of that already. So they could start talking about tapering at their next meeting in June 16th. So if the jobs data continues to surprise to the downside, it may be a very short discussion. But from my understanding, those numbers came out this morning and they were relatively positive. So, moving forward, we do expect the US dollar CAD to throttle between, anywhere between 118 and 124, maybe 125. But there is, higher chance of it pushing further down into that 116, 118 range. So that's all I have to share with you today. I appreciate the attention, and if there are any questions, I'm happy to field them either by email or either on the table. I think I'm running a little bit late here, so I'll hand it over to Bill.
Oh. Sorry, great, Richard. Thank you for the presentation. Really appreciate it. And Bill, just before you get started, I just want to do introductions quickly. Great. Thank you again, Richard. And so we're going to have a talk now by QA Consultants. So I'm going to introduce Bill Klages here. QA Consultants Partnership and Alliance Relationships, and heads the U.S. Western Region expansion for QA Consultants. And he's got over 25 years of business process and IT outsourcing experience, including leading analyst relations for an offshore IT brand, and as a former senior sourcing advisor with Information Services Group. Bill's a retired CPA and has over 10 years of Big Five professional services experience, and has a marketing MBA from Northwestern University. And I'm going to go ahead and while we're at it, introduce Gabby, who's going to come up next. So Gabby Szasz is a senior partner. She's held various global leadership positions in telecom, consulting, and financial services operations. Prior to joining QA Consultants, Gabby specialized in modernizing QA organizations within many of the world's largest banks. She recently served as global CIO of enterprise quality at Wells Fargo Bank. Within Wells Fargo Bank, she championed QA accountability and oversaw the transformation of a 5,000-person QA organization, culminating with moving to a decentralized model. She also championed multiple new diversity programs within the IT organization, and she holds a Bachelor of Electrical Engineering degree from Carleton University in Canada. So I'm going to hand it over to you, Bill, and I'll drive your slides for you.
Great. Thank you so much, Rob. And Richard, that was a fantastic presentation, very informative. Thank you so much. Good morning, everyone, and good afternoon to everyone on the East Coast. It's a great pleasure to be with you guys. Really enjoy these events, the Maple events, and hoping that we can get back to live events in September. Rob, if you want to advance to the next slide. So once again, my name is Bill Klages. I manage our partner and alliance relationships, and I head our U.S. Western region business. Gabby's joining today. She's based in New York. She's going to share some really unique insights on ways to bring real diversity advancement into your organizations. Despite the compromises that our businesses have faced with the COVID pandemic over the past 14 months, QAC's actually had a great year. This is highlighted by some investments that we've made and some very exciting quality and automation solutions in emerging technologies. I just wanted to say that we're very proud to continue our relationship with the Maple Business Council. We're in our second year. We're enjoying a lot of benefits, and especially sharing with other members and forming business partnerships with other members like Exahive, a cybersecurity communication specialist. We also worked with another Maple member, Olena, the CEO of Art One Translations, where she joined Sam and my colleague Gabby for a diversity webinar back in March of this year. And as I said, we're all very excited to hopefully get back to face-to-face events in the fall. Next slide, Rob. For the newer members who may not know QA Consultants, we're a 26-year-old specialty provider of software testing services, and we're based in Toronto. We were the very first North American boutique software testing provider, and we deliver our services largely from our testing center of excellence, or what we like to call our test factory, that's located in Toronto. Our US business is headquartered in Dallas, Texas, and we provide all of our testing services onshore, and we work with our clients to automate as much of their testing as possible to streamline their cost of quality and accelerate releases of software applications and products to the market, or increasing their ROI on quality. In a moment, I'm going to cover some really cool stuff that we've been doing in the emerging technology space, such as designing test automation accelerators to test the cognitive software that drives autonomous vehicles and robots. We work closely with several Canadian government agencies and research institutions, such as the Automotive Center of Excellence's Climatic Wind Tunnel, the most sophisticated wind tunnel in the world, where we operate our software test bay for automotive systems integration testing. Next slide, please. This next slide's quite detailed. I'm not going to spend too much time on it. It's really meant as more of a cheat sheet that summarizes the types of software testing services that QA Consultants provides. On the left side, you see our traditional software testing offerings, where we provide quality assurance across many types of platforms and digital applications. We service most sectors, but have really deep domain knowledge in banking, insurance, retail, automotive, and digital media. On the right side, this reflects what I consider the really cool stuff that we do and what differentiates QA Consultants. We'll touch on a few of these items, starting with our work in model-based testing and the test automation capability that we can bring to a variety of markets, including insurance and automotive. Then we have our XCOG, Accelerated Test Automation Solution, which was recently featured in a Forrester research publication discussing the need for testing in AI. I think some of you may have attended our webinar last week that featured a demo of that solution. And I'll spend a few moments on the importance of accessibility compliance testing for your user applications. And then Gabby will round things out with a discussion on smarter ways to integrate diversity into the business. Next slide, please. So I'd like to share with you some of the highlights of the differentiating work that QA Consultants is doing in the deep technology areas like AI and autonomous vehicles. We have a long history of collaborating with Canadian research and innovation partners like the National Research Council, Ontario Tech University, and their ACE Wind Tunnel. Our expertise is software quality, and in the past, we're primarily focused on the quality of enterprise software and various business software applications. Now, more complex software is affecting virtually every part of our lives, from the gadgets in our homes to the automobiles that we drive, and quite realistically, the robots that will be attending to our variety of our needs in the very near future. This requires an attention to quality like never before. Human safety and the security of our assets relies on very complex software that drives autonomous vehicles or runs our building infrastructures or flies the drones that are soon to pass overhead. The complexity of that software, the thousands or even hundreds of thousands of decisions that AI must make to safely operate a vehicle must be tested thoroughly. This testing would be cost prohibitive to do manually, let alone the continuing iterations that are required as new software releases and new models of vehicles are coming to the market. QA Consultants is addressing the need with our test automation accelerators that not only save significant cost and effort, but can be deployed earlier in the build cycle to find and fix potentially expensive defects. We employ simulation and model-based testing practices to bring these automated solutions to the market. When we talk about model-based testing, what this really means is modeling the features or functionality of a system, or essentially digitally replicating that system with a combination of simulation and injectors that mirror how that product or system will perform. Two benefits of the testing methodology are that we can test expensive robots and equipment virtually so as not to physically damage the product in test. And secondly, it allows for the ability to run complex testing much earlier in the build cycle to catch defects and make corrections well before production. And as you see on the slide here, two solutions that we're very proud of that use these testing advancements are our systems integration testing, or what we call SIT. This solution is for the multitude of complex components found in today's automobiles. And then our other solution that I mentioned earlier, our XCOG test automation accelerator, is for testing the cognitive AI systems that move autonomous vehicles and robots. Next slide, please. So I'm going to switch gears here because I think this is a topic that may apply to many of you on the call today. I wanted to spend a few minutes on the topic of accessibility and the importance of compliance for businesses of all types and sizes. QAC considers this part of our inclusion initiatives, so this is a nice transition over to Gabby's discussion in a few moments. So what is accessibility as it relates to digital applications? When I say digital applications, I'm talking about websites and mobile apps. Well, if you are farsighted like me, but you don't wear contacts or don't always carry your glasses, ordering an Uber or a Lyft and trying to read the license plate number or view the color of the vehicle on the app screen, it can be nearly impossible. For me personally, that's an accessibility issue. But for those people with much more severe sight disabilities, imagine the difficulty in simply reading these apps on small devices or maneuvering on a website that is not well designed. How might that affect user abandonment, resulting in poor service or a lost sale? And here's some key thoughts. Do you know if your website or mobile application is compliant with the various local and international standards for providing accessibility? Does your e-commerce platform cater effectively to the population segment of 65 years or older? And how do you know if your digital assets meet these requirements? A few weeks ago on May 20th, we recognized Global Accessibility Awareness Day. It was a time to emphasize digital access and inclusion for people with disabilities in the ongoing global digital transformation. There are a number of standards and guidelines in Canada and the US, as well as internationally, to help organizations make their user interfaces and websites accessible to people with various disabilities. So why is that important to you? Well, it really comes down to your customers and clients or prospective users. How do you know if your customers with disabilities are abandoning your website? Will they tell their friends if they've had a bad experience? Well, of course they will. Customers and clients over the age of 65 are making up an increasing percentage of your business. And by all statistical accounts, this will continue through the year 2040. So how do you know if you're compliant? Well, you don't want to find out from a potential customer or an existing client. The best way to get there is by having professionals with the expertise on the various country standards to test your websites and mobile apps on a periodic basis. But more importantly, recommend the improvements needed to bring your site into compliance. This is an investment that'll make your business better. And as I finish up on the last slide, please reach out to me if you or anyone in your network is looking for accessibility advisory or may need these testing services. Again, if you're selling or servicing the North American market, your customer-facing digital platforms should be in compliance with both international and local requirements. The bottom line is that with an aging population, it's just good business to frequently audit and test all of your user interfaces. Down below on this slide, you'll see a link to the QAC site that provides additional details on the compliance requirements for both the Canada and US, as well as types of services that we provide in this area. So I want to thank the Maple folks again today. Rob and Stephen, thank you so much for a great event, and thank everyone for your time today. And now I'd like to hand it over to my partner, Gabby, to discuss our next topic.
Thank you, Bill. So I'd like to thank Maple for making this possible. Diversity is a very big topic for me. It's something I've been dedicated to for most of my career. I grew up in Canada. However, I was born in Budapest to child survivors of the Holocaust who escaped communist Hungary with me in their arms. And we escaped to Germany and then grew up in Canada where they gave us asylum. People that have had the kind of background I have had understand diversity and understand the need for cultures to mix, how to deal with different cultures, different languages. And that is so critical to the way our businesses run today in our global economy. I've spent 25 years on Wall Street. I married an American, that's why I made it to New York from Canada. I spent 25 years on Wall Street. I spent 25 years being the only woman in a room, dealing with topics that men like to talk about in the early stages of a meeting. I've always dealt with, the baseball scores, the golf scores, the talk about tailgating at before a football game. And I've been fighting for the diversity, equality in these companies. And it's been a struggle up until now. Our current president in the US has a real dedication towards diversity, which is great. The social changes in our culture have been extreme over the last year. And Canada has also been very participative in raising the eyes to all of the diversity issues the companies are facing. Now, how do we have a discussion about the goodness that diversity brings to companies? It's more than just a numbers game. Right now, I'm sorry, I live in Manhattan, so sometimes you're gonna have to deal with some outside sirens going on. You know, these companies are turning the diversity issues into a numbers game. And when does the numbers become good enough to have people of different racial backgrounds or having women as part of the culture, as opposed to understanding that a change in diversity for a company brings employee satisfaction much higher, and at the end of the day, a company makes more money. So one of the big things that we've done at QAC is start to talk to CIOs and CFOs and heads of diversity about enacting the change of the diverse landscape of their organization into the plans of technology enablement, moving to digital transformation. There is no better time to infuse that diversity into the organization as you go through a skills assessment, as you understand the gap of your existing organization to where it needs to be from a technology standpoint. But now you have the discussion of what kind of landscape of diversity do you have as well? And do you retrain, which is a very big topic today for many companies. They have people that have worked for their companies for many years, understand their business, but they're manual in nature. They don't have the technology background. They don't code, but they're trainable. So to train these people and start their second, third, fourth careers moving into technology is something that we've been focusing on at QAC. Helping these CIOs come up with these plans of retraining, hiring at the right levels. Something that most organizations are now struggling with because they feel that, and you know, Charlie Scharf, the CEO of Wells Fargo, had an epiphany a year ago, made a very bad statement that he'd hire more people of color if they were qualified. That is the mindset that we're trying to move away from, and it's more about getting people retrained. There's nothing stopping people from becoming Java coders, Ruby coders, with some small elements of training and then building that into their digital transformation. So these are some of the things that we are working on with our clients to move the needle as far as adding more diversity into their landscape. I'm going to, we wanted to break and have a 5-minute set of Q&A. So happy to have any kind of questions or thoughts from the participants if they're interested in having that discussion. Don't forget to unmute yourself, please, if you're going to ask a question. No?
So Gabby, at this stage, why don't we go ahead and go back to the floor? So if you have questions of the participants, you can join them, find them on the floor, one-on-one discussion or in the small groups. And so, we could wrap up our discussion here. We certainly want to point out these great webinars that you've also made available as well on celebrating women in digital transformation and diversity in software development and Q&A. So if there are any questions at all, certainly feel free to speak with any of our speakers back on the floor. Stephen, did you have any wrap-up comments before we do that?
I had a question for Gabby. Is there a case study that you could briefly highlight of a company that saw the opportunity in their digital transformation to advance their work in diversity?
Actually, those are hard to come by, because as they're finding out, a lot of these companies that have reached their goals of, let's say, 30% of women in technology have not experienced the increase in employee satisfaction, and are now going through a second wave of work of bringing in specialists on the diversity side to figure out why their culture hasn't progressed and why people have not increased their satisfaction of working at the company, which has resulted in many companies dealing with attrition issues. Mm-hmm. So that's why this work that I'm talking about is so critical. It's not yielding the results that they want to see.
Got it. Thank you. I would just like to underline, if you haven't seen Gabby's webinar, Celebrating Women in Digital Transformation, it is an outstanding content to catch. And we shared it with our members in one of our founders' emails. But if you haven't caught it yet, I highly recommend it. Some very powerful personal stories being in a very, I think, relevant context of that many businesses can relate to. Yeah, I would just add, Rob, the thank you to everybody for coming today, and we look forward to continuing the conversations on the show floor. Thank you, Gabby.
Thank you.
Okay, so we'll go back to our tables. So you'll land back where you were when you joined the session. Thanks, everyone.